Welcome back. In today's video, we're going to talk about how do you actually buy a house prior to selling your current house. I'm joined by Jim Black of Revest Homes. Welcome, Jim.
Thanks a lot. Thanks for having me on. Long time no see.
Long time no see. Inside joke there. There's some loan programs out there that allow you to purchase a house first prior to selling your house. So a lot of people who are current homeowners, they want to buy a house. Often they need the equity out of their house in order to buy a new property. But the challenge that some people have, I think this is kind of a common challenge as well, is that people are not, just listing their house for sale and then waiting for the right house to pop up, because that could take months and months, even potentially years. And so there are ways in which you can, if you find a house that, matches all of your criteria, you've been waiting for it for a long period of time, you don't have to rush to get your house listed for sale and then place a contingent offer. So that's what today's video is all about. So Jim, take it away.
Awesome. So it's a simple way of, this program is known as Buy Before You Sell, BBYS, or simply put, the Buy It Now button. That's the simplest way I can explain this opportunity. A lot of families right now they feel trapped in their property, not because they're upside down, not because they can't afford their payment. It's the opposite, actually. It's because if they move, they can't afford their payment, or inventory is so tight, there's no properties that they want to move to. So that's called the anchoring effect that's happening right now, where people have a low rate of maybe 3 or 4%, and they don't have the motivation to move unless they find the property that they're looking for the next life event. That's where the Buy Before You Sell bridge loans step into play. These programs allow someone to make a non-contingent offer, otherwise known as a contingency buster loan, where they can write an offer, either like all cash and close quickly, or do a conventional loan. In either example, they're using the equity from their current property as down payment for the next loan. They're very complicated loans. A traditional bank doesn't do these very often, but what we find is it gives our borrowers an edge up against other offers that might be similar. People, again, don't know about these products that are out there. So again, if you find a rare opportunity, if you find a house 2 doors down from your parents, or maybe 2 miles farther from your in-laws, that might be a good opportunity for you. Maybe you find a house next to your best friends or in the best school district, and they have no turnover or no inventory that comes up. That's a great way to think of these programs that allows you to buy before you sell. Or maybe you're retired. Maybe you have a 2-story home and you want to be in a single-story home closer to your retired friends. In any of those situations, you do not need to list your house for sale first. You have time. You have up to a year normally to wait to do that. The biggest thing is you wouldn't want to do that unless you know where you're going to be ending up. And that's why this approach is so convenient. It doesn't create an expectation for you to sell your house right away. You can wait until you find the right properity.
Let's talk about that. Let's talk about that. I'm on the real estate sales side, right? Often I'm also a licensed law officer just like yourself. But if I'm a listing agent representing a seller, I get 2 offers. One offer is, hey, my clients just saw this hit the market. They absolutely love it. They want to place an offer. Then as a listing agent, one of the first questions I ask, is it going to be contingent on them selling their home? And in this example here, it would be yes. So in this example, the house probably is not even listed for sale. So placing an offer that's contingent on selling, in which the house is not even listed for sale, it's basically the bottom of the barrel regarding offers, because you have no idea, how fast the house is going to sell and when the house is going to be listed for sale, for example, as well. So that is really at the bottom barrel regarding terms of an offer. In contrast, using this bridge loan example, buy before you sell, again, like Jim says, you can write a non-contingent offer, meaning you can't have a contingency, obviously, for inspections, but you can have no contingencies for an appraisal and loan. So writing an offer, let's just say I'm representing the seller, an offer in which it's contingent on the buyer selling the property, and it's not even listed for sale. That's just basically a throwaway offer in many markets, compared to an offer in which it's basically acting like a cash offer. You can close in how many days, Jim? Is it 7, 14
You
days?
can close one of those like all cash offers in 11 days, at least in
11
California.
days.
Every state's different. So reach out to us to learn more about how state requirements play a role in this strategy.
Absolutely. And Jim's like a specialist in this in the San Francisco Bay Area, the Santa Cruz County as well, NorCal, I'd say. But so, getting the offer that's contingent on selling, basically a junk offer compared to an offer that's, hey, we can close this in 11 days. And by the way, there's no underwriting process involved. In other words, like as a seller or a listing agent, I'm not going to worry about the buyer getting their final loan approval. And on top of that, I don't have to worry about, hey, is our contract price, let's say it's $1 million. I don't have to worry about an independent appraiser valuing that property for less than $1 million, which will, cause another round of negotiations between the buyer and seller. So this is basically like a cash offer closing very quickly, based on an assurance that they're going to be buying this house as long as inspections go well. So I just want to kind of shed some light on that. It's much different getting an offer that's contingent on selling compared to an offer using this loan product, for example.
And I will give an example personally. 2 years ago, I had a house in a seasonal market, as a house in the mountains. I knew if I didn't sell my house by like November 1st and close, I was going to have to wait till probably next May or June. So smart buyer came in. I had 2 offers, one that was contingent upon them selling their other mountain house first, or an all cash offer like a bridge loan that came in $30,000 less, or about 5% less. But it was peace of mind to me to take that offer because I didn't want to deal with the winter. I didn't want to deal with making my mortgage payment or having to maintain the house or worry about some contingent offer that may not even go through. So it works. It works well for both buyer and seller when they understand the cost versus the value of doing this. And everyone's cost versus value is unique to them. And that's what I also love about this, is that there's not a one size fits all program. So it's truly about your objectives. Jim, I got to move into the school district by September 1st. I have to be in there. Otherwise, I can't move my kids. Jim, I have a 2-story home. I have a bad hip. I want to move into downsize into a single family home. I got to do it. It's painful. I can't live in this house anymore. I have to go rent something else otherwise. It just allows you to get a call to action completed and give you time to do whatever you want on your sale. Maybe you need to do new carpet, new paint, new improvements. Take your time. You don't have to rush to do that. A lot of people that make a mistake and don't have good representation around them will sell their home first and then be in a scramble to figure out where they're going to move to. My horror story on this is I had a family, true story, have to go into 10 Airbnb rentals for 1 week at a time for 3 months because the agent told them that they should sell first and buy later because the agent was not versed on this, did not know that, versus they could have bought that new house and sold their other house later, versus trying out every strange Airbnb house in the neighborhood. And they had animals too. So the animals had to be in had to be in a pet hotel, which is extremely more expensive. So again, everyone has different needs. Maybe you have small kids, maybe you have special needs, maybe you have animals, maybe you're a senior, maybe you're relocating for a job. Either way, this is a viable way of looking at a situation. It allows you to go look for your next lifestyle move without committing to anybody about selling your house or fixing it up or staging it to have all these random people come in. You can do that later.
Yeah, I mean, it gives you a peace of mind, some flexibility on that. So if you find a house you absolutely love, you write a contingent offer, then you have to, and let's just say they accept it. Then you only have a set period of time in which you can sell your house too, right? That's probably per the contract. That's going to vary on the contract in the area as well. So you might be more inclined on taking a lower offer on your existing house than if you had more time to figure out selling your house first. So in my mind, this could be a fantastic way for people to get that flexibility, and also they could be leaving money on the table by not doing this as well, potentially as well.
And and you also think about what's the time value of money. Again, time value of money means if I have an opportunity cost on this money today, what is it in today's market, or what is it if I don't do something? And that's your decision as the consumer. I don't have the answer. I'm not going to push you to do something. You decide what value and time means to you and what cost is versus value. So everyone on this channel needs to do that in their own mind and figure out what that means. Because I'm only going to support something where it's been vetted out, people understand the trade-off of the cost versus value, and then it's up to their own goals. So that's the best way of helping people, is put it in their court first, get their objectives out of the way, figure out where their pain points are, what's important to them, and then we provide the resources.
Yeah, absolutely. One thing too that I was, we've been talking about bridge loans, you and I, for a while now. And one thing that really caught my attention as well is that the underwriting process as well. I mean, using a regular loan to buy a house, the underwriting process is like going through an audit. It's so, I don't know, let's just say time consuming versus using a bridge loan, for example. It's a very easy underwriting process. I would say that's a big time benefit on that one as well. But of course, it's not for everyone. But if you're interested in buying a house first prior to selling, might be an option you want to explore at the very least, though.
And it's no harm, no foul, by the way. So there's no cost until it funds. So get pre-approved using this option, and then go feel like you have opportunity to go look at things. You don't have to be on the sidelines. You can go look, because when rates go lower, I believe values will be the same, if not higher. So again, if something costs less tomorrow to buy, there'll be more people wanting to buy that. So again, do it on your own terms. What's important to you? Why are you making this move? Why do you need to even sell or move or do whatever you want to do? And our job as professionals is to look at that long-term horizon and your ability to repay your debts. Some people that are downsizing from, like, let's say they're moving from $1 million house to a $500,000 house and they have no loan. That's awesome. The underwriting is very easy. I'm very confident they won't need a loan at the end of the day. So there's just ways that we always want to look at not only the short term, but the long run, to make sure people understand the trade-offs of doing this. And I have another good story that happened last week for us. Speed is your friend in tight inventory markets where people are competing. We knew this beautiful home, one-of-a-kind home near my house on the beach, came available. We knew that the offers were going to be strong and fast. So what we did, and this is a realtor thing that Jason would be good to answer questions for you on, we gave them a 24-hour accept or decline offer. We didn't want to wait for the open house to get marketed. We didn't want to wait for every neighbor to come look at the property and try to get their friends to buy it. We knew strategically that we had to offer fast, quick, as a yes or no answer, so that we would not risk other offers coming in and creating a bidding war. So in our example, we won. Other offers may have come in afterwards, after we're in contract. So case in point, make sure you work with the local professionals that can get you that strategy that gets you the home at the best optimal way of doing it.
Yeah. And then the terms of the offer, I'm sure, were enticing to the seller. If you're offering a fast close, no appraisal, no loan contingency, you're basically just get through inspections and you're golden. And so they might be more willing to accept that offer than waiting out for the weekend. I've done that many times on offers, placing a deadline, because in California, if I don't put any deadline on there, they can sit on your offer for 3 days, call everyone who's showed the house, maybe even sharing your terms of your offer, and try to get more people to write offers on the property. So I've done that as well. Placing like a 24-hour turnaround time and saying, hey, take it or leave it, and had clients get their offers accepted from that. So that makes sense.
So this is reason number 843,000 to use a realtor, because the realtor listened to my advice. They saved the borrower exponentially more than the buyer broker fee, right? By doing this specific thing of giving a 24-hour accept or decline, they save themselves hundreds of thousands of dollars on the purchase price. So I believe in this example, the realtor's buyer broker commission was justly paid for because they saved them exponentially higher by this strategy. And again,
assuming if another offer came in much higher than their offer, you're saying, right?
Yeah. So again, work with professionals that know how to be creative and can evaluate the situation and provide value. It's not an order taking environment. If I was to go through one of these companies on prop tech stuff, that offer would not have been accepted because I did not have the insight being local to know what was important triggers for the seller and the motivation. And so that's a different style there of like working with the best versus the cheapest.
Makes sense. Well, Jim, thank you very much for, with the hop off here, but yeah, thank you very much for your insights. If you guys want to book a call with Jim and myself to talk about your real estate goals, whether it's on buying a house or refinancing or buying a house using a loan, in this example, then please reach out to us. I'll provide a link in the video description below. Jim, thank you again. Thank you for joining us. Really appreciate you.
Thanks so much for having me. And again, we can help with buy before you sell and bridge loans.
Awesome, man. Have a great day. Thank you everyone for watching today's video. Like and subscribe, and we'll see you in the next video. Thank you so much.